What's up guys, welcome back to my YouTube channel. It's Amas. Today I'm going to be showing y'all 5 trades you could have caught last week in order to make some money using prop firms and with a one-to-one risk to reward system. Let's get it. Step 1, you want to identify a 15-minute fair value gap. If I go here to my chart, as you guys can see, we have a 15-minute fair value gap. And what is this gap telling me? It's telling me that the buyers are the one controlling this price tag here. Okay, from this candle's high to this candle's low. So once we get the chance to trade back inside of this zone, buyers will most likely defend their position to create a short-term reversal in the market. Okay, so we want to see price entering inside of this gap, and if we start seeing weakness from the sellers, this is where we can anticipate a potential move back to the upside. Step 2, you want to wait for price to enter inside of this 15-minute fair value gap where you anticipate a possible reversal in the market. Right here, your job is to scale down to the 1, 2, 3, or 5-minute chart and locate where are the sellers inside of this price leg when we enter the zone where we are most likely going to reverse. Now I scaled down to the 2-minute chart, and as you guys can see, when we entered this 15-minute gap, we were being really aggressive. What does that mean? It means that we created a fair value gap on the way down. Okay? Fair value gaps are buying and selling aggression in the market. If I see that we have a fair value gap here on the 2-minute chart, it means that the sellers are located between this candle's low and this candle's high. So the next thing that comes into my mind is, if we are truly bearish, we should respect the area where all the sellers are located inside of this range to create a new low. But if we're bullish, we're going to absorb the sellers right here inside the 15-minute gap, and we're going to disrespect the area where the sellers are located in the chart, which will create a short-term reversal in the market. So right here, I'm trying to look for a potential reversal if we can inverse the 2-minute gap right here to the left. Step 2 of this system is that you want to wait for price to enter inside of this 15-minute gap by creating aggression. You want to see a fair value gap created either on the 1, 2, 3, or 5-minute chart that tells you, okay, the sellers are located between this candle's high, this candle's low. So if I get the confirmation that we absorb price here and we disrespect the area where the sellers are in the market, then we have a potential long opportunity back to the upside. Step 3, you want to wait for price to disrespect the area where the sellers are located right here, which is between this fair value gap, and you will have the confirmation that the buyers are the one controlling the market and that the sellers are currently being squeezed. So then you will put your limit order on the pullback to the zone which was the bearish fair value gap, because you're going to use it as an area of resistance and the area of covering. Okay, if the sellers are located between this candle's low and this candle's high, it means that if price is pushing through a zone where a lot of sellers are located, then it means that they're currently in drawdown. So what are they going to do? They're going to sell an insane amount of shares to bring them back to the break-even spot, and then they will click on buy to get out, which will drive the market back to the upside. This is called a covering area, and this is where you want to enter on these type of scalps. So right here, you wait for price to pull back to your inverse fair value gap, and in few minutes right here, you hit your target for a 1-to-1. Okay, so if I have to recap this trade again, tap a 15-minute zone where you expect a potential reversal to happen. Then the step 2 is, when you enter this 15-minute gap, you need a 1, 2, 3, or 5-minute gap to be created in the opposite direction, which tells us that the sellers are the one being aggressive and that the buyers are trying to absorb them when we tap the higher time frame gap. Then you wait for the third confirmation, which is the inverse, which tells you that the sellers are being squeezed and that they're not the one controlling the market, and that the buyers are the one controlling the market. Once you inverse this gap, then you put your limit order back where the sellers were currently were located before you tap the gap, and then you put your stop loss below this low right here and your take profit at a 1-to-1 risk to reward. Now let's take a look at the second example. As you guys can see, we took the first trade right here, so we have a potential long opportunity right here. Why? Because we created a 15-minute bullish fair value gap. And what is this gap telling me? It's telling me that the buyers are really aggressive once we hit this price level. So if price enters this zone, we will look for potential short-term reversals in the market because we know buyers will be there to defend their position. Now that we created the 15-minute gap, which is your step 1, you want to wait for price to enter inside of this 15-minute gap to see if there's a potential reversal. Right here we just entered, so my step 2 is try to confirm, is there aggression created by the sellers right here when we entered the 15-minute bullish gap. Okay, right here I know that this zone is a zone that we could bounce from, but I need to know where are the sellers inside of this price leg when we entered the 15-minute bullish gap. Now I'm just gonna wait for price to tap inside this 15-minute gap, and then I will look for potential signs of weakness of the sellers to trade back to the upside. Right here we know buyers are gonna be willing to defend their position right here to create new highs, but once you enter inside of this gap, you want to look for potential areas where sellers are located to see who's going to win the battle right here. Now I'm going to scale down to a 1, 2, 3, or 5-minute chart to locate where are my sellers inside of this range. So right here I'm on a 1-minute chart, and I cannot see any gaps here yet. Okay, so now if I go down to the 3, I cannot see any gaps, but then, so basically when I go to the 3 right here, I see gaps, but there's too many gaps inside of this range, which is not what you want to see. You want to locate only one singular fair value gap, which is going to tell you that this is the time frame that you should use because the sellers are located between one fair value gap. Right here, if I go to the 3-minute chart, you can see there's a gap right here and there's a gap up there. So it means that this 3-minute chart is telling me that there's sellers right there and right here. So I'm not going to use this time frame as the time frame to play the inverse from. I'm going to try to look for a time frame that only has one gap from the leg created when we entered into the 15-minute bullish zone. So right here I need only one gap to be created so I can trust the time frame that I'm taking the trade on, because if let's say there's only one gap, then I can expect the covering to happen exactly at the right area to then trade back to the upside. So right here, this is exactly on the 5-minute chart that we can see it. As you guys can see, we have a 5-minute gap created on the way down. Okay, right here when we tap the 15-minute gap. So here is the area where I know buyers will try to defend their position. Then what is my next step right here? My next step is you want to see, is there any aggression by the sellers when we entered into a bullish zone? Okay, and right here, this is exactly what we get the second confirmation, which is yes, we created a bearish fair value gap on the 5-minute chart, which tells me that the sellers are being aggressive right here, and that if we're truly bearish, we should respect this zone here, which is my fair value gap, where are the sellers located to create new lows. But if we're bullish, okay, we're gonna disrespect this gap, and we're gonna see a move back to the upside for a potential short-term reversal. So right here, my step 3 is to wait for price to disrespect this fair value gap here, and I'm gonna go long, stop loss just below this low here, and I will try to target a 1-to-1 risk to reward, which is right above this internal high right here. So this is the area of cover. You could wait for a super small pullback, but right here it's literally at the same price tag. Boom, you would go long. You feel the cover is happening right here, so the sellers are covering their position because they're being in drawdown, and in few minutes right here, as you guys can see, you hit your target. So if I have to recap this trade again, tap a 15-minute bullish fair value gap where you expect potential reversals to happen here. Second step, you created a bearish fair value gap on the way down, which told you, okay, the sellers are trying to be aggressive here, and they're located between this candle's high and this candle's low. So if we're truly bearish, we should respect this gap to create new lows. But if we're bullish and the buyers were able to absorb the sellers right here from this zone, then this fair value gap here will get disrespected, which will be our confirmation to go long on the pullback to see a move back to the upside. As you guys can see from this price action on that day, you had a long opportunity from this candle right here and another long opportunity right here. So 2 trades in one day, and 2 ended up being winners. Now let's take a look at our third example right here. As you guys can see, if I go to the left, we have a fair value gap right here on the 15-minute. Okay, so for me to recycle this fair value gap, I need us to sweep this internal low right here. Okay, I could still use a gap that was already used before, but I just need to sweep the most recent low that filled the fair value gap right here to then recycle it. So right now I'm just waiting for price to sweep this internal low, tap into this 15-minute gap, and confirm me that okay, the buyers could stand up right here and could try to defend their position for a move back to the upside. boom, this is exactly what we get right here. We have a sweep of this internal low and we respect this fair value gap. Now that I have my step one, which is tap a 15-minute zone, I will scale down to a 1, 2, 3, or 5-minute chart to see is there a singular fair value gap where I can locate the sellers that are being aggressive when we entered the bullish zone. So right here, if I scale down to the 1-minute chart right here, we have too many gaps inside of this range. Okay, this is not what you want to see. You have gaps right here, you have gaps to the upside also right there. So this is not a time frame that you can really trust that the sellers are located inside of this time frame. So then you would go to a 2-minute chart, same thing right here. You have a super big gap up there and a super big gap down there. Okay, so again, 2 gaps inside of this range. This is not what you're trying to look for. Now you go to the 3-minute chart, and this is the right time frame to use. Why? From this swing high to this swing low where you tapped the 15-minute zone, so your 15-minute fair value gap, this is the area where you created a singular fair value gap on the way down. So the sellers for me, when I look at the 3-minute chart, are located between this candle's low, this candle's high. So for me, the first thing I say to myself is, if we are truly bearish, even if we swept this low, we should respect this fair value gap to create new lows. But if we're bullish, we're going to disrespect the zone here where the sellers are located. Then we will see a potential cover from those sellers and a move back to the upside for a potential short-term reversal. But right here, I'm only looking for price to disrespect the zone, which is my third confirmation. Right here at this candle, this is where you create your inverse fair value gap. Also, you created an order block. This small down close candle is telling me that, okay, we had a fair value gap, so we had sellers being located between this candle's low, this candle's high, and they try to push price down right here. This down close candle is telling me, yo, they try to push price down here. We could see some downside, but then we respected this small gap below us, and we closed above this down close candle, which is creating also another extra confirmation that, okay, the buyers are really the one controlling this market and that the sellers are being squeezed. So right now you need to look for a potential long opportunity back to the upside. Then you wait for price to tap back into the area where the sellers were located, and you go for potential one-to-one. Right here, since there's a swing low formed by this candle, you could trim your stop loss at an area that is a little bit higher than what you used to be. Okay, so boom, right here you would go long inside of this candle right here. And as you guys can see, in few minutes you hit your target again. So if I had to recap it again, we tapped the 15-minute bullish fair value gap where you expect price to create a short-term reversal because the buyers are super aggressive and are willing to defend their position. Once we tap this level right here, then second confirmation, you want to see aggression from the sellers when we tap the bullish zone, which is a singular fair value gap either on the 1, 2, 3, or 5-minute. And once you get this confirmation, you're just looking for price to inverse the gap and tell you that the buyers that initiated the up move from the 15-minute gap are the one controlling the market, and that the 1, 2, 3-minute chart are just noise, and that the sellers are not controlling the market. It's just noise on the lower time frame, and that you want to see a move back to the upside. 1-minute chart is a pretty good time frame to use here because there's only one gap from this swing low to this swing high. So right here, as soon as we disrespect this fair value gap right here, I know that the buyers are located between this candle's low, so this candle's high right here, and this candle's low. So if we are truly bullish, we should respect this fair value gap to create new highs. But if we're bearish, we're going to disrespect the gap and then see a potential move to the downside. Okay, so right here, I'm waiting for price to disrespect the zone, and as soon as I see the disrespect, I will go short for a one-to-one opportunity, and I want to use this small box right here where the buyers were initially located to trade back to the downside. Why? Because there will be cover from them. Okay, they are currently in drawdown, and what are they going to do? They're going to manipulate price back to their break-even spot so they can click on sell, which is going to crash the market. So right here, we're waiting for a price to pull back. This is the exact area where you would go short, and you wait, and boom, in a few minutes you hit your target. Now let's do the final example. We're still on the same day. We already took 2 trades on that day, but we have another possible opportunity right here. We formed swing highs here inside of this range, and I know the gaps are still available for us. For me, if we trade above those highs and we reject those highs here, and we disrespect a bullish fair value gap created on the way up when we tap the bearish zone, I have another potential reversal back to the downside. This is just accumulation for me. So right now, I'm gonna wait for price to enter inside of this 15-minute zone, which we do right here. Boom, we enter inside this 15-minute zone, and I know there's a lot of possible sellers right here willing to defend their position. So now I'm gonna scale down to a 1-minute chart to see where are the buyers located inside of this chart. Boom, scale down to a 1-minute chart. There is 2 fair value gaps. I cannot use this time frame as being the time frame where I can locate my sellers. Now I go to the 2. The 2-minute chart, same thing. We have 2 gaps, 1 gap right here, 1 gap down there. So I'm not using this time frame to see the potential cover. Now I'm going to the 3, and now this is a really good chart to look at. Why? We have only 1 fair value gap located right there. And what is this gap going to tell us? It's going to tell us that this is the right time frame to look at in order to judge that the squeeze of those buyers will be exactly at this price level. Inside of this price action, you already have 2 confirmations. You have the first one being a tap inside the 15-minute bearish fair value gap, so you expect downward pressure. So right here you have also the second confirmation, which is a bullish fair value gap created either on the 1, 2, 3 or 5-minute chart when you entered the 15-minute gap. And then your third confirmation would be to wait for price to disrespect this fair value gap so you can see a potential short opportunity. And right here, when you see this candle right there, this is the moment where you need to go short on the pullback to the area where the buyers are located, sorry. Right here, I will then go short at this small box right here, which is the inverse, putting my stop loss right above this high, and I'm going for a 1-to-1 risk to reward trade. Right here, I get filled inside of this candle, and in few minutes you hit your target immediately. So right here, again, 15-minute gap, which is the area where the sellers are going to be located, 15-minute bearish gap, then create a bullish fair value gap on the way up, which is a gap that is in the opposite direction of where the participants in the market are most likely going to defend their position, and then you inverse that gap back to the downside, so you know the sellers are the one controlling the market and that the buyers are being squeezed. Thank you guys so much. I hope you guys enjoyed this video and gained a lot of value from it. I see you guys in the next video. Peace out.